Hi everybody. So in today's video we're going to answer the question of whether you should take the health insurance offered by your employer or whether you might be better off going and getting a policy on your own. Sometimes we call those individual policies, or we refer to that as the individual market. So in this video we're going to explain why I think that your employer option is generally the better option for you. I'll give you 4 reasons for that. Before we begin though, I want to do a little bit of a seatbelt check here, a safety check, and make sure that we stay safe as we're doing this. So regardless of the advice that's given in this video, never cancel your existing insurance coverage unless you're certain that you have an enrollment right under some other policy. Now, if you don't know what I mean by an enrollment right, then step 1 is do not cancel your coverage. And step 2 is talk to either us or contact an insurance agent, talk to your employer or HR, somebody that you can get some help with so you don't find yourself uninsured. You can cancel your policy and find yourself locked out of an ability to get insurance elsewhere. So just bear that in mind. Okay, so let's move on to the 4 reasons why I think your employer policy is better. Reason number 1, you have more options available in the group markets than you do in the individual market. This is largely a development in the last couple of years from some of the political reforms that have happened in healthcare. This video is not political. We get political in other videos, but bottom line is there are fewer options. So in Utah, for example, where I'm located, you have 37 options available in the individual market, where there are 181 in the small group market and even more in the large group market. So there are just more plan options available in the group markets. Now, an exception to this particular argument would be that even though there are more options in the group markets, your employer has the say as to which plans will be available to their employees. So if you don't find a policy that's being offered by your employer that works for you, that may be a reason to go to the individual market. However, just bear in mind that your employer is putting together the health packages that they are in an effort to recruit and retain employees. So they're wanting to try and kind of hit the mark as far as what your needs are. And if they're not doing that, then your feedback to them is very valuable, and you might find that they're willing to work with you. In fact, I would suggest that most employers would gladly take their employees' feedback and try and provide options that work for them. So I would say talk to your employer first. Okay, the second reason why I think your employer plan is better is cost. The prices in the individual market have exceeded the prices in the group markets. Now, this is also a recent development. Historically, the individual market has been cheaper, and in fact, in doing research for this video, I came across a number of sources posted even recently that are suggesting that the individual market is cheaper. It's not the case. Take Colorado, for example. From 2017 to 2018, they've seen a 27% increase in the price of their individual products, where they've only seen about a 7.5% increase in their group products. In Utah, I'm seeing about a 10 to 30% price difference between the group products and the individual products, meaning the individual products are 10 to 30% higher, just depending on how you want to draw the comparison. We'll go 10% to be conservative, but it's actually much higher than that. There's just not an apples to apples comparison. So bottom line is the price is higher. And in fact, this graph right here, this chart that I'm showing, helps illustrate that a little bit better. You see 2 almost curves, if you will. One of them is composed of green dots, one of them is composed of blue dots. The green dots are the individual plans, and you can kind of see how on a price continuum they shoot straight up. And on the blue dots, there's a much more gradual increase as we move across the plans continuum. So price is higher in the individual market than it is in the group markets. An exception to this particular argument is that we haven't accounted for subsidies or for employer cost-sharing arrangements, sometimes called the contribution. So both markets, the individual market and the group markets, have features that can further lower the cost of health insurance for you, and you would want to account for that in your analysis if you were wanting to move the cost argument further. Okay, the third reason why your employer's plan is better is employer incentives. So many employers will offer incentives. 2 that immediately come to mind are incentives for wellness participation and then HSA money. So an example would be a company might offer a wellness plan, and they would offer a discount for non-smokers or a premium discount for individuals who meet some sort of a wellness objective. It could be something simple like completing a health questionnaire, or it could be doing something a little bit more behavioral, walking so many steps per week or day, or going to the gym or something along those lines. Some of those things some employers will offer incentives for doing that, and those incentives usually are premium discounts. Additionally, employers that offer HSAs, which by and large more and more employers are offering those these days, they will usually offer some sort of an HSA contribution as well. They'll give you money into an HSA account, but generally the way they manage that is by only contributing HSA money to employees who enroll on their HSA plan. So the takeaway from that is that if you don't participate on the company's medical plan, you're not going to qualify for the wellness discounts usually, and then you're also not going to qualify for the HSA money. So the fourth reason, and before I go on to that, I don't know of any takeaways from that or any kind of an exception that I would make in that case. If your employer is not offering an incentive, that might be a reason not to be persuaded by the incentive, but that's definitely not a reason to go to the individual market. Okay, the fourth reason is taxes. Taxes are a bit more cut and dried, and I'll itemize it this way. If you visit our blog, you get more of a financial analysis. You can find the blog at the web address above my head, and there's actually no web address above my head. I'm going to put it there in post. But anyways, the fourth reason is taxes, and the distinction in taxes is that under a payroll situation where you're having your benefits taken out of your paycheck, you're having those benefits pre-taxed. I can say all the fancy words: cafeteria plan, Section 125 plan, POP plan, whatever. All of these are the mechanisms by which an employer can deduct the cost of your insurance before your taxable income is calculated. And what you get to deduct is FICA tax, you get to deduct federal income tax, and you get to deduct generally state income tax from your paycheck before, or you get to deduct your benefits from your paycheck before those taxes are calculated. So you pay a lower tax rate. On the individual side of things, and we're talking about non-self-employed individuals. Self-employed individuals get a higher tax break for medical expenses. But if you're not self-employed, then you do not get any FICA tax deduction. Your federal income tax deduction is limited to those expenses which exceed 10% of your adjusted gross income, and the state income tax implications vary. So the short is you get to deduct more taxes from a group plan than you do from an individual plan. So those are my 4 reasons as to why your employer plan is better than taking an individual plan. Thank you for watching. We'll catch you in the next video. Please feel free to visit our blog, leave a comment on the blog or on the website, or if you'd like to just visit the YouTube channel, if that's where you're at, go ahead and leave a comment there, and we welcome your feedback, appreciate the conversation, and we'll catch you in the next video.